Hey everyone, welcome back. Over the years I've tested a lot of investing strategies. I've chased hot stocks, ridden crypto waves, and even tried day trading. Some worked short-term, but nothing gave me the same peace of mind and growing income as buying and holding quality dividend stocks for the long term. Today, I want to share with you exactly what I've learned from my own portfolio. The 5 dividend stocks I personally buy and plan to hold forever. These aren't theoretical picks. These are the companies I've trusted with my own money through market ups and downs. If you're a serious investor who wants reliable, growing income that compounds year after year, this video is for you. Let's dive in. Hashtag why I switched to dividend growth investing. Early in my journey, I was focused purely on capital gains. But after watching my portfolio swing wildly during corrections, I realized something important. The real power isn't just in price appreciation. It's in owning businesses that pay you more every single year, even when the market is down. That shift changed everything for me. Dividend growth investing gave me sleep-at-night confidence and real financial momentum. When you reinvest those growing dividends, the compounding effect becomes almost magical over a decade or more. In 2026, with all the uncertainty around us, I'm even more convinced this is the right approach. So let me walk you through the 5 stocks that form the core of my long-term dividend portfolio. 1. Johnson & Johnson, J&J, my healthcare anchor. The first stock I want to talk about is Johnson & Johnson. This is one I've held for years, and it's become a true cornerstone of my portfolio. Johnson & Johnson has raised its dividend for 64 consecutive years. When I first bought it, I was impressed by their stability, but what really won me over was how they perform in tough times. Whether it's a recession, inflation, or market crash, people still need medical devices, pharmaceuticals, and everyday health products. That's the power of their wide moat. Right now, it yields around 2.3% with a very safe payout ratio. I love that they continue investing heavily in their pipeline while still rewarding shareholders. Watching my quarterly dividends from Johnson & Johnson grow steadily has been incredibly satisfying. If you want one healthcare name you can truly own forever, this is the one I personally recommend without hesitation. 2. Procter & Gamble, PG, the stock I trust most in daily life. Next is Procter & Gamble, a company whose products are literally in my home right now. PG has increased dividends for nearly 69 years. That kind of consistency is rare, and it's exactly why it's one of my largest holdings. Every morning I use their products: toothpaste, soap, detergent. Billions of people do the same. This creates incredible pricing power and predictable cash flow. The yield sits around 2.8%, and the payout ratio remains responsible. What I've experienced personally is steady dividend growth that outpaces inflation year after year. During volatile periods, PG has been one of the most calming positions in my portfolio. This is the ultimate set-it-and-forget-it stock. I genuinely believe most investors should own some PG for life. 3. Coca-Cola, KO, my Buffett-inspired forever hold. Number 3 is Coca-Cola, a stock I started buying because of Warren Buffett's long-term love for it, and I've never regretted it. With over 64 years of dividend increases, KO has proven it can thrive across generations. What fascinates me is their global reach. No matter where I travel, I see Coca-Cola products. That brand strength is unmatched. They've also smartly expanded into other beverages to stay relevant. Current yield is around 2.5 to 2.7%. For me, KO represents timeless simplicity, a business that should exist as long as humans are thirsty. The compounding I've seen on my reinvested shares has been beautiful. If you want a truly forever stock that feels like owning a piece of history, this is it. 4. PepsiCo, Pep, the diversified compounder in my portfolio. 4th is PepsiCo. This one brings me both income and growth, which I really appreciate. Pep has a 50-plus year streak of dividend increases. What I love is the balance. Snacks through Frito-Lay and beverages. This diversification has served my portfolio well during different economic cycles. The yield is attractive, often above 3.9%. I've watched the dividend grow nicely while the company expands into healthier options and emerging markets. In my experience, PEP delivers that sweet spot of current income plus solid long-term growth. It's one of the positions I add to regularly. 5. ABBV, ABBV, the growth king I'm most excited about. Finally, ABBV. This is the stock in my portfolio that combines reliable dividends with strong growth potential. With a 50-plus year streak, ABBV has dramatically grown its payout since the spinoff. Their drugs like Skyrizi and Rinvoq are performing exceptionally well, which gives me confidence in future increases. Yield around 3% with a healthy pipeline ahead. What I've learned holding ABBV is that great management can successfully navigate patent cliffs and still reward shareholders. This is my growth-oriented forever stock. I'm personally very bullish on it for the next decade and beyond. My personal portfolio strategy and honest advice. So how do I actually use these 5 in my own portfolio? I keep them as core long-term holdings, roughly equal weight or slightly favoring the higher yield ones, depending on valuation. I buy on dips using dollar cost averaging and always reinvest the dividends. This approach has given me growing passive income that I barely have to think about. Of course, no strategy is perfect. I've seen drawdowns, and there are always risks, regulatory issues, competition, or unexpected events. That's why I diversify and never invest money I might need soon. This is not financial advice. It's simply what has worked in my own experience. Do your own research and consider speaking with a professional advisor. If there's one lesson I've learned after years of investing, it's this: patience and consistency beat timing the market almost every time. Start small if you need to. Add regularly. Hold through the noise. The dividends will take care of the rest. I'd love to hear from you. Which of these 5 resonates with you most? Have you been building your own dividend portfolio? Drop your thoughts in the comments. I read every single one and try to reply. If you found value in this honest, experience-based breakdown, please like the video and subscribe for more practical finance content. Thank you for spending this time with me. I truly appreciate it. Until next time, invest wisely, stay patient, and keep building that brighter financial future. Take care, my friends. See you soon.